Hi, thanks for joining us today. I'm Marlon Bowling, your tour guide to the ag commodities. So good to have you with us. Well, I tell you what, let's take a look at what's going on in the markets. But I want to remind you that we had an overnight export sale. And in case you hadn't heard this a little bit ago, we did have a sale of soybeans to China. And you know, it was a fairly sizable one this time around. A little over 250,000 tons were sold overnight. So 251,000 tons of soybeans to China. And you add that to the mix. Of course, they bought some earlier this week as well. And the market got just a little bit of a boost out of that, not very much. Some analysts think that that was already baked into the cake anyway at this point, so you be the judge. All right, let's take a look at our prices. Let's start with the corn market in Chicago right now on the big board with our quotes provided by Bar Chart. Well, September corn is back to unchanged, so we're right back where we started today. We're at 485 3/4, and now December unchanged as well. We're at 498 3/4, basically just right back to our close last night. Now on soybeans, we have September now a dime higher at 1363.5, back to within a nickel of our overnight high. And now you have the November contract up 8 3/4 at 1314 3/4. About 9 cents or 8 cents, we'll call it, off of our overnight high in the November soybeans. Now, wheat has been dragging its feet today in Chicago. It still is. September down 13 3/4 at 642.5. December down 12 1/4 cents right now. In Kansas City, the hard red wheat, September down 7 1/4 at 763 1/4. December down 4. In the Minneapolis spring wheat trade today, so far, we have September down 5 1/2 at 825 1/4. And in our cotton, the new crop December contract is now 26 points lower. We're at 84.94 per pound, but kind of edging closer to 85 cents once again. Todd Bubba Horwitz is with us from BubbaTrading.com. He's in Chicago. In Las Vegas this week. Hey, Bubba, thanks for joining us here. A lot of downward pressure here in the markets. Most of the markets today, save for the soybeans. But I just wondered how much of that you attribute to heading for the sidelines ahead of the WASDA report here in a couple of days.
I really don't attribute anything to it, Marlon. What I attribute all the price action to is that nobody cares, nothing's going on in any market right now. There's no liquidity, there's no volume, there's no action. And I think when you have markets like that, commodities will tend to drift lower in that scenario, while equities will tend to drift higher in that scenario. And right now you have really an overall lack of interest in any market, basically globally right now. They're just kind of floating back and forth, working at about 40 to 60% of normal volumes.
So how are the funds positioned on the grain side? The last you heard here, are they getting fairly even now or not?
I think they're still pretty short, Marlon. This is obviously that is what keeps more pressure, and that's very typical of fund money when they sniff some weakness, and of course the lack of trade creates weakness because it forces those who maybe really own it to have to panic out or sell at lower prices. So it's kind of like a self-fulfilling prophecy that they push them down and they force some liquidation out, and then they pop right back again. And I would assume that when this will end similar to the action we had a couple of weeks ago with a huge rally, but that rally has not been able to sustain itself. And I think when we really get the interest back, which I think will tie into an equity sell-off, then you'll see them start to take off, and then they won't stop. But right now, so it's a challenging market. It's hard to trade, and nobody's getting any value, and it's really hurting the farmers.
You know, I was driving around personally around the Tennessee and Kentucky border area yesterday looking at some crops. And some of the corn, I mean, it's already starting to turn brown. The shucks on the ears are turning brown. The lower half of the plant is starting to turn brown, like it's already ripening. But it seems like maybe that drought stress that we had before the corn pollinated maybe kind of took some of the wind out of the sails on the yield. It just doesn't seem to look right, you know?
No, I understand, and I think the yields are going to be short, but. Again, right now we're talking money. We're not even talking true crops. We're talking where can the trade, where can the funds make the most amount of money, no matter what the reality is. Because the reality is at these low levels, I find it hard to believe that the producers can make any money at these levels of pricing. And yet we know that crude oil is going higher. We know the prices are higher at the store. The only place prices aren't higher is at the wholesale end from the producer.
There you go. All right. Thanks, Todd, for talking with us. Todd Bubba Horwitz with BubbaTrading.com in Las Vegas. We'll have your livestock trade right after this.